Stock-based compensation. Stock-based compensation has been a concern for this company, good old Palantir, for the past couple of years. In fact, it's one of the biggest red flags I get on Twitter in my trolls that are DMing me all the time or that are in the notifications. Like, how can you invest in Palantir? Why do you speak so nicely about Palantir? They're deluding you. They're taking your money. And they're running away with it. And while this may be like true on paper from a transparency perspective, you're like, oh my God, they're just diluting me. They're taking my money. There's a long-term growth argument around stock-based compensation, and that it's not for every investor. For some investors, they may feel like, oh, the company's just diluting me. They're taking my money. They're giving it to their employees, and I'm getting no benefit for it, and I'm subsidizing the cost for these employees. But when you're investing in a growth company that has really, really strong major potential to actually be one of the most important software companies in the world, there is a logic that is guiding stock-based compensation, and there is an also decreasing trend of stock-based compensation articulated by the CEO for why they need to do stock-based compensation in order to eventually get rid of stock-based compensation. And if you can understand that logic, you have a much, much better understanding of what Palantir's strategy is with stock-based compensation. Why am I bringing this up today? Well, we got this news that came out that I thought really triggered me to be able to be like, this deserves a video, given it proves why they're doing stock-based compensation. And if you're a real investor that understands the long-term potential of this company, you will understand what the logic is behind what the growth story is for Palantir. Palantir's Joanna Peller, UK health lead, has been named one of the Data IQ's most influential people in data in 2022. So first of all, let's just understand that headline right there. There is a person that works at Palantir in the UK health lead of the company's business. Why is the UK health lead important? Because they have a $34 million deal to optimize Foundry within the NHS, which is the National Health Service for the United Kingdom, that recently an article just came out was reducing patient wait times by 28%. There's a major backlog in the UK because their healthcare system is just not the best. Palantir's Foundry data-driven software is actually optimizing the entire country to be able to save thousands of patients and their time on non-surgical related treatments. That's why the UK is extremely important for Palantir. Joanna Peller, who works as a UK health lead and is a forward deployed engineer at Palantir, is one of the most influential people in data. Like, just think about that for a second. Palantir is a person in their company that was named one of the most influential people in data. When I saw this headline, I was just like, wait a second. This is why they do stock-based. Like, it just reminded me why they do. Like, I don't have a problem with stock-based compensation, especially because of what we're about to hear, what Alex Karp says about SBC. But like, it reminded me again why I'm investing in the company and why they pick the best talent in the world. So let's read her little bio. After growing up in Boston, Massachusetts, I moved to the UK to study mathematics at UCL. I began my career as a software engineer in commodities at Goldman Sachs. I joined Palantir. Notice she left Goldman Sachs for Palantir to be a forward deployed strategist in 2016. 2016 was not when Palantir was doing well as a business. The Foundry was just starting off, so there were definitely some growing pains. She's probably been there since the very beginning, where I joined a team focused on manufacturing and supply chain solutions. In March 2020, I started working on the NHS to deploy the Foundry platform to form a single source of truth for the COVID-19 response and power operational decisions across the organization. I now lead our health work in the UK, which spans from vaccine supply chain optimization to effective recovery and beyond. So a couple things there that are really important to understand. Number one, Palantir got the ability to create a single source of information, a single operating system for the UK to help with their vaccine distribution during the COVID pandemic. There is a reason why people choose to stay at Palantir and the churn rate is low. What is one of the reasons? Well, because when you're solving a national health crisis for a company, given your software skills, it's much more cooler than trading commodities at Goldman Sachs, right? Like, so there's a level of purpose that is associated with a company that's trying to become the most important software company in the world by doing things when things go bad in the world and having the people feel they are used in a purposeful manner to make a literal impact on people's lives. Now, Joanna is working from vaccine supply optimization to everything else within the UK and within the NHS, and Palantir's adoption within the NHS. This goes to show that the people that work at Palantir, she's been there since 2016, so that's 6 years she's been there so far. She hasn't left. And if you know anything about FANG and Apple and Google, most people don't stay that long. I mean, they get their shares, they vest, and then they're out. And part of the reason why I think she's staying and part of the reason why I think she feels she's one of the most influential people in data is because when you actually do something meaningful with data, like help people not have to wait long in a hospital when they need to get treated for, especially when there's a nationalized healthcare service that probably is not the most optimized, you start to become someone who gets the attention of a lot of people in that industry of like, what is this person doing in data that other people aren't doing? And what company is allowing them to do this stuff, right? Like, there's people on Facebook and Google that are probably optimizing advertising really well and click-through rates really well. Those people are not the most important people in data. They're important, but they're not the most important people in the data. And the most important people in data are people that are doing life-saving things and creating life-saving technologies with data. Now, why does this matter? Well, let's go back to stock-based compensation. Let's look a little bit about this. So this was tweeted by Brett Krieger 12, awesome guy on Twitter that tweets about Palantir. This is Palantir stock-based compensation. All right, so let's get into some of the numbers. Here's stock-based comp. So this is all of the millions of dollars they spent on stock-based comp. So in 2019, they spent 27 million, 79 million, 67 million, 66 million for a total of 244 million across cost of revenue, sales and marketing, R&D, general and administrative when it came to stock-based comp. 241 million. 2020 was the big year. They spent 1.2 billion on stock-based comp, and a lot of people got annoyed by that, and that was a major red flag. As you can see, in 2021, that decreased significantly to 778 million, and I believe in 2022, we're going to look at a video of Karp talking right now, that's also going to decrease significantly. The question is, why is there all this stock-based compensation? So first of all, it's a downgoing trend, which is good, right? It's good for it to go downward over time. But number two, why are they doing this? Well, the number one reason they're doing this, going back to Joanna Peller, is you don't get someone who is the most influential person in data in 2022 unless you give them some equity. I mean, it's just common sense at this point, right? Like, that person has all the options in the world to go change the world. They're going to be incentivized by a mission and by equity. And at the end of the day, if you have to pay those people to not be in Google or Amazon or Facebook, that's the benefit to having them at your company. Now, the reason I get confused when people are so concerned about stock-based compensation, and we're going to see what Alex Karp's response to it is in a second from the earnings call that he talked about, is that you can't just do stock-based compensation and expect the company to be profitable. Like, the whole reason employees are staying is because they expect the share price to go up. If you're at Palantir and you get your options at $10 and you expect the stock to be at $100 7-8 years from now, it has to actually go from $10 to $100 for you to make any money. Right? So just because you're getting paid in stock, it doesn't matter if the stock goes down from $10 to $9. Like, you're losing money at that point. So stock-based compensation is a method that Palantir is using to attract the best talent in the world because they're going up against the biggest tech giants. They're not trying to be a company that gets bought out. They're trying to be a company that legitimately is able to stand on its own. When you're doing that, you need to have a level of equity in place for the best engineers in the world, which is why I don't worry about stock-based compensation. Would I like to see it go down? Yes. Has the trend been going down? Yes. 2020 was an outlier because that's when they were going public and they needed to retain some of the best talent in the world in order for their DPO to be a success. But at the end of the day, I see stock-based compensation going down. And if you can get rock stars like Joanna, that's probably a good reason to have stock-based comp. Let's go back to what Alex Karp said around stock-based comp for people who forgot. I think it's very important to revisit this. This was a retail question, and then we'll listen to his thoughts.
Most negative sentiment I hear regarding Palantir is in regards to the dilution of shares outstanding over the past 12 to 18 months, and primarily in relation to stock-based compensation that's occurred. Other than the remaining shares to be vested that have already been announced, can we expect further dilution and share offerings going forward, or is it kind of reasonable to assume that the majority of this was from the IPO process and sort of a one-time event for the company? Once again, thanks and congratulations on all the hard work and business developments.
Thank you, and I really appreciate you investors. Thanks for investing and the faith you have in us. Okay, so there's like the simple version, which I think, it's like, so there's stock-based comp and there's dilution. The dilution thing, that's a red herring. We're not issuing a lot of new shares. I think it's like in the $9 million range. And so it would be a little coy of me to say that's like no issue, move on. The thing to understand about Palantir, and then I want to just hit this, is like, it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And so most companies are, quite frankly, built so that when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, now we're thinking about how do we expose the data in a way that, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking, what's not tracking. But the primary source of a lot of these questions really comes down to, look, we built the company to support the U.S. warfighter primarily, and then dual use it for the glory of humanity, particularly humanity in the West. That was our idea. And because our primary client was not what someone at a hedge fund would think, we didn't actually think of these things from inception. And so now there's a process of normalization. You're going to see that in going forward on these calls. It's like, how do you normalize? How do you provide data that people can look at? How do you provide data that people can understand, that they're used to seeing, while simultaneously staying true to what our mission is? It's like our primary clients are the people we're serving. We're in full line with them, and that's why we survive. Even with the nascent sales force, you can get things to double, which is insane. So then you get to stock-based comp, which is like, okay, so and there's two parts of it. Of course, IRI people kind of don't want me to do any kind of forward-looking math, but if you're smart enough to invest in Palantir, you're smart enough to figure out there's essentially there's the how are we comping people, and there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally, and that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people or correctly. Your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future.
So the argument here that Karp is making is very simple. His argument is like, look, to get GAAP profitable, we actually need to have less stock-based compensation, because if we keep having stock-based compensation as an expense, we don't become GAAP profitable. GAAP profitable are generally accepted accounting principles. They are already operationally profitable at the tune of 30 or 29%, but they're negative 14% in terms of GAAP profitability. And the major thing that's getting them from potentially being 30% profitable, they did 1.5 billion in revenue, so they would have 500 million in profit, is the stock-based compensation. That's getting them down negative 14% because they spent $700 million on stock-based comp. So in 2021. So that's the core issue here. And as you said, when Karp was saying, look, we didn't build the company for like Wall Street analysts. He's not trying to throw shade at Wall Street analysts. He's saying, look, we built the company because we wanted to get the best talent and we wanted to reward them and incentivize them, which is why we built the company. As a result, once we started going public, Wall Street didn't like that, and we never built the company for Wall Street. So now we have to go through this process of normalizing how do we actually show why we did stock-based compensation and how do we fundamentally reduce it so that everyone in the world that's investing in Palantir, as he said, if you're smart enough to invest in Palantir, can understand the initial reasons for doing that stock-based comp and the normalization of stock-based comp in relationship to other companies as it begins to go down. So, to me, if you're going to get rock stars like Joanna on your team and you got to pay them some in equity, and I got to get diluted a little bit, but if I'm in this stock for the next 8, 7, 10 years, right, and I'm seeing those people are the reason this stock is going to have an inflection point where it has exponential gains, I am totally fine with that at the moment. It sucks in the short term when your stock is down and you're like, well, they could be profitable if they're paying all these employees, but then you're like, wait a second, they're paying these employees because they're actually building stuff that's changing the world. And they're the most influential people in data. And that's why I'm investing in Palantir. Thank you guys for watching the video. Let me know your thoughts. I'll see you on the next one.